Ladies and gentlemen, good day and welcome to the Q2 and H1 FY24 earnings call of Kamat Hotels India Limited. We have with us today Mr. Vishal Vittal Kamat, Executive Director, Ms. Smita B. Nanda, Chief Financial Officer, Mr. Nikhil Singh, Company Secretary and Compliance Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand over the conference over to Mr. Vishal Vittal Kamat, Executive Director of Kamat Hotels India Limited. Thank you, and over to you, sir.
Thank you very much. Namaskar, everyone. It is my pleasure to have the first conference call for the of Kamat Hotels India Limited. It's been quite a journey for us, and I'm very grateful to the huge number of participants who have participated today. So thank you for taking out on a Saturday and for doing the needful. So anyways, first and foremost, I'd like to say that we've had a very interesting journey. Many of you, for those who do not know Kamat, I just thought I'd have a quick introduction. We've been in the family business from last third generation. I'm a third generation entrepreneur, thanks to my father, Dr. Vittal Kamat, and my grandfather, Sri Venkatesh Kamat. From humble roots of being a dishwasher at the age of 10, he came to Mumbai, and today Dr. Kamat has culminated that into creating Asia's first 5-star environmentally sensitive hotel in 1997, and the journey has been growing ever since. So with that, we also added various other Orchid hotels, the Orchid Hotel Pune, and recently the Orchid Hotel Manali, Shimla, Lonavala, and various more are in pipeline, which we will take up ahead. Apart from that, we also have a crown jewel for our Maharashtra and India as a whole in Fort Jadavgarh, which has been doing exceedingly well and is the unique Maratha Fort Heritage Hotel in entire India. Rest all focus on various others, but in terms of Maratha culture and our Marathi heritage, it's quite an icon. With that, we also have various other resort properties in Orissa, in Konkan Coast, in Goa under our Lotus brand, which are also doing exceedingly well. Lotus Konark is a achievement for the government of Orissa, OTDC, and for Kamat together in creating a model icon, environmentally sensitive resort. And that's why it's showcased to every guest who comes of any state, nature, and I'm very happy to say that even the Rashtrapati himself wanted to visit at that time, and we did his catering in 2021. So with that, then we recently have our Era by Orchid Hotels, which is our upper mid-market segment chain, which has been extremely well received. We launched it on 1st July 2023, and with Bhubaneswar and Mumbai being the first two, and happy to inform you all that tomorrow we will be opening our Nashik Era by Orchid, which is our old hotel being renovated and completely made new. So Era as a brand will be growing rapidly, and we will come to that subsequently. I would also like to share that we have some excellent news. A lot of people who have been with us from a long time were waiting for this same news. There were two news they were waiting for. The first one we achieved in January 26th of 2023. That is the restructuring and the entire cleanup of the Kamat Hotels situation which we were in. So I'm grateful to many people who have supported that endeavor. And the second great news is that from the 297.5 CR debt which was there, even though it was sustainable, the efforts of the company was to bring that also rapidly down, and that yesterday got culminated into the sale of our Andheri property. So I'm very happy to inform all that now our debt remains at only 172.5 CR. So with that brief introduction, I'd like to hand it over to my CFO, Smita Nanda ji, whose efforts have been instrumental in this, and she will take it forward. Yes, Smita ji.
Thank you, sir. On consolidated, thank you, sir. As earlier mentioned by our director, executive director, Mr. Kamat, we are very optimistic to take this year, financial year, into in a good way, and accordingly our EBITDA and revenue will go up. On consolidated basis, revenues of the Q2, Q4 were up by 4% YoY stood at rupees 64 crore. This was due to improvement in ARR and annual revenue across all our properties. EBITDA stood rupees 19 crore and remained largely unchanged as compared to same quarter last year. This was because of the improvement in room realization was offset by increase in employee and other expenses. Basically, other expenses is due to the stamp duty and registration fees which we have paid for new 8 lease properties, which will be operational by 1st of November onwards and 1st of December onwards. That was down by 99% year-on-year basis. Q2 FY24 standing at rupees 3 lakhs due to increase in tax and finance cost. On half-yearly basis, revenue stood by 134 crores, 2% up on YoY basis. EBITDA was down by 13%. Reason being that we in last 2 years we have not given a sustainable improvement in payroll due to COVID, because hospitality industry was affected at large, very largely. And secondly, there was a new property acquisition on lease basis, so we paid a stamp duty, brokerage and registration. Because of this, our EBITDA margin was 31%. Tax stood at 1 crore. With this, I can now open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
We can start.
The first question is from the line of Anupama Bhutra from Arihant Capitals. Please go ahead.
Yeah, thank you for this opportunity, and thank you for taking up the phone calls for the company. My question is regarding Jadavgarh Port, the occupancy. So the occupancy is somewhere around 50-65%. Is it only because it's far away from the city?
Namaskar, Anupama ji. Basically, Fort Jadavgarh, being a heritage property with only 58 rooms, tends to, it's not about distance. Actually, it is not at all quite far in that sense. From Pune, it is only about 40 minutes depending on traffic. And even from Mumbai, it's 3.5 hours. So we are already a very popular destination for weddings and events and corporate functions. Lots of things happen. But because it's 58 rooms, there is a challenge that when you look at any hotel's overall occupancy, ideally a hotel which has say 150 for a destination, 125, 150, 175K beach in that range, the occupancies tend to improve more because you are able to do better functions, bigger functions. Unfortunately, at Jadavgarh, it is only a 58-room property. And knowing that in mind, we feel that its performance is good. Of course, I would always, as a promoter and as a management, always want more occupancy. But considering that it's in position as a premium place, it does its fair share in terms of revenues and demand. So we would like to increase its occupancy, but considering that it's only 58 rooms, that does tend to have a challenge. Larger hotels have an advantage of being flexible and being able to take more kind of functions. So that's the challenge with Fort Jadavgarh.
Okay, sir. Thank you so much. Got it. Thanks.
Thank you very much. The next question is from the line of Guneet Singh from CCIPL. Please go ahead, sir.
On call. So what should our run rate for interest payments be? I mean, we paid an interest of 16 crores for the quarter, and now that our total debt is going to go down. So what should we, expect our interest payments to be going forward from Q3 onwards or Q4 onwards?
Very good question, sir. I'll ask Smitaji to answer this.
Namaskar, sir. My current total interest cost was almost all 30 crores for half yearly, including 20%, which is total 20%, including couponing. Now it will go for next half annual is almost all 18 crore rupees, which will be, it would be 12 crore rupees, which would be lesser than the current, because of here it is we have sold out the 40% of the, we have paid off the 40% of our loan amount. So because of that, my interest costs would be coming near about 12 crore for next half year.
Okay, so for the entire year around 24th year and 6th year for a quarter.
Correct.
And what kind of lease agreement do we have with the hotel that we sold off? What is the duration of that? And what kind of lease payments are we making annually?
So basically, the person who has purchased the hotel has agreed to give us continued to manage. So we are very happy to have taken that, because we want our brand ERA to grow. Plus, basically, there has been a substantial reduction of approximately 25 CR in interest, that saving, and we expect to earn approximately 5 CR from operating the hotel. So net to net, the company will still benefit by 10 CR for the year. That is the working which we have seen. So, and there are certain other opportunities also which we see with by doing this transaction. So that's how the thing is.
All right. So, what kind of, how much lease are we paying annually for that?
We will be paying approximately 20 CR.
All right.
Per annum, sir. Huh?
All right. And we are saving around 25 CR in interest. So
Right.
Net, we will be saving 5 CR.
And from operations, the revenue which we will earn will be 5 CR. So net to net, we will be saving 10 CR and earning 10 CR rather for the company in total.
All right, got it. And this quarter, we saw a fall in our margins, operating margins. So, what is the primary reason for that?
As explained by Smitaji, basically, we have been growing and expanding. So there have been a lot of payments which we have paid as brokerage, we have paid as stamp duty, and also to mobilize these hotels, there are certain mobilization costs. Unlike other hotel companies who are more interested in management, management is a good model, but it's a very safe model, and operator may not necessarily get the advantage of the upside. We are very confident in whichever location we are taking, so we are willing to take them on lease, which helps us take the upside benefit, especially for our company. And for that, there is obviously going to be a more payout in terms of, materials, in terms of manpower, in terms of other things. But that's part of your initial setup cost. So all those costs also have, which for the 8 properties which you signed up, have been borne by the company till now. And that all will start getting offset once the operations of the various units will starting from tomorrow itself.
Okay.
As I mentioned, we are opening ERA by Orchid Nasik tomorrow. So from that, so if systematically all these will again fall into the operational expenses that will get evened out.
All right. So what kind of operating margins can we expect Q3 onwards, and for FY25?
As per our company, which we have always been doing, they will come to other 30-35% ke beech mein, depending on unit to unit. Okay, so that's broadly how it has always been, and that's how it will remain. We are very diligent as operators, and that is, as you can see with our stagnant performance, there is a consistency in that stagnation. That's because whichever hotel, once it stabilizes, we are able to get the kind of margins which we expect.
All right, got it. That's all from my side. Thank you and all the best.
Thank you, sir. Thank you.
Thank you very much. The next question is from Neeraj Mansainga from White Pine Investing Private Limited. Please go ahead, sir.
Yeah, thank you. I had 2-3 questions. One, what will be your interest expenses in FY24 and FY25?
So, sir, the interest expenses for the remaining 6 months you're asking?
Total of FY24 and total of FY25.
So basically, it will be 35 CR approximately, 34 point something to be exact. 20% of 172.5 if we do the full year.
Okay. And next year, what should it be? FY25, the year ending March 25?
But sir, just to add to that, basically we have a lock-in which is till July 2024. And the company expects to shift this to refinance this or to another more reasonable loan, which the company today also is eligible for, but because we have a lock-in, we have to wait till our tenure of July 24. So once that happens, substantially even this figure will come down in terms of the interest payment. What it will come down to, sir, will be subject of at that time whatever the refinance is done. But it will definitely not be at the percentage which we see today, because the company touchwood is in a different position.
No, just to understand, obviously not an exact number we want, we just want a range, because see, you will be having around 175 crores plus you'll having cash in hand in July 2024. So our run rate of would be close to say 15-16 crores a year or more. Okay.
So, sir, let's assume that after in the month of July, considering that hypothetically say the company decides to utilize cash flows in its hand of up to 25 CR, then on 150 CR, if we take a 10%, it will come to 15 CR. If we take a 12%, it will come to 18 CR. So it is a matter of at that particular time. But broadly, we today will assume, just for discussion's sake, that the company will refi at 172.5, which it is, because at that time, based on the outlook, based on cash in hand, and based on future growth, we will basically look at the final number of refinance. It may be 150, maybe 160, maybe even lesser than that. That's, I think, a call which we will take based on the situation at the time.
So to rephrase, the current expensive run rate of 35 crores can go down to 15 to 18 crores range in FY25 on a run rate basis.
Yes, sir. Yes, sir.
Yeah, okay. Okay. So the other question is on the revenue. Are you seeing a traction in the ARR right now, or it is flattish on a value-wise basis?
So market to market, there has been either flattening or there has still been a growth in ARR. Okay, it is again a very market-driven thing, because with G20 summit happening, though we don't have a presence in Delhi, I can give you an example. Because of G20 summit happening in Delhi, ARRs were boosted thanks to the summit. Okay, so the government also is supporting various initiatives, because of which there is a market to market. India is too vast a market to generalize. So based on every state government and central government's efforts, there is definitely spots which we see, which helps the overall month. So by and large, the performance of the company has been in sync with last time. That's why we find only a 6% growth YOY, 6 to 7% YOY growth.
Okay, got it. But what is the outlook like? Do you see this improvement coming in, and is there a demand-supply equation, and considering the pricing that we are having and the fact that Lemon Tree has started the hotels? Any thoughts on that?
So, sir, basically, if we look at the hotels which we have already having a mature market presence, there would be a marginal growth, not an exceptional growth, but the company will have an exceptional growth as per what we have given as a guidance, because of the number of new units coming in, because of the number of new hotels being added. So our guidance is based on the growth of additional hotels rather than existing hotels doing better, because they've already been at their peak performance in terms of 85% for the year. So there is no point in us trying to extract more from them. That we will obviously do based on revenue management, which we do on a daily basis. But the real growth will come from our expansion, which we can see.
And what is it? You have actually given a guidance of the keys increasing to a large number from the current number to almost 25 properties from 21 right now. FY23 and was 13. Sorry, yeah. FY23 was 13, and we are targeting 25 properties by FY25. So and 2,200 keys. What kind of revenues can you achieve, and what is the confidence of operationalizing those assets till March 25?
So, sir, we have basically given a guidance of approximately from the current level of 300 to 400 crores for the FY25. Now, that is based on simple logic that we are adding approximately 10 more hotels. These 10 hotels will not do 10 crore, they will do more than that because they are of different size and scale. But on an average, if you look at it, a conservative outlook of 10 crore per hotel is not a big achievement for us to do as a target. So we will definitely achieve our guidance of 400 crore, which while it looks substantial, it is based on a simple, explanation. So from 300 next year, we expect to cross the 400 mark as a console.
And what EBITDA margin you are forecasting, because at 400 is a good jump on FY23?
As per the company's past performance in the present case also, and as in the future case, we will be doing anywhere between 30 to 35% is our standard operating margins as Kamat Group.
This is despite the new hotels coming in, because these would be all new properties for you, right? So.
But even if they are new properties, sir, Kheladi Purane hai, we know what to do in terms of our cost management. It is only the initial cost that costs us in terms of setup cost. But once that is done and stabilized, then the operating margins are not an issue for us.
Okay, I'll come back to the case. Thank you very much.
Thank you very much. The next question is from the line of Sakshi from Swan Investment. Please go ahead.
Hi, sir. So firstly, congratulations that you've been able to reduce your debt. I wanted to understand that going forward, what is going to be further our debt reduction plan?
Thank you, madam. Mitaji, aap bolenge?
Yeah. Thank you. Namaskar. This is related to the debt reduction. Yesterday we have reduced by 125. Now we don't have any room till next July where we can reduce our things as per our agreement between the lender and the borrower, which will happen in the month of July 2024, and where we will refinance completely pay off this 172.5 CR debt to the current lender, and we will get it a refinance with a lower rate of interest.
So to answer your question, madam, broadly we are saying that at 172.5, even if the amount of debt is not reduced, the worst case scenario for us would be to refinance it at a lower, much substantially lower interest cost. So that's, you can look at it in both ways. Principal reduction also, if at that time it permits, and which we do feel it permits. But considering the overall outlook, we've decided that we review our stance every 6 months. So at that particular time in the month of May, we will review how the outlook is for the coming time, and based on that, either we will reduce this 172 to a much lower figure, or we will retain it and we will bring down drastically the interest. So one of these two is what we will look at.
Okay. But on a long-term basis, considering that we are, we have such growth, we have such strong growth plans. So what is the debt number that you are comfortable with on a long-term basis?
Madam, comfortable so we are today also, because even at 172, our debt outflow for the next quarter is only 17 CR, which is not much, So it's not about being comfortable. It's about doing what will be best for our growth and our shareholders. So we will work out that equation and we will see accordingly. So the company, if you are trying to ask me that will the company be looking at taking on more debt for growth and expansion, that is not required, because the company cash flows are strong and we are using that money itself for growth. To give you an example, we have renovated entirely our Nasik hotel from internal accruals. We have not taken a single rupee borrowing, and yet the project was completed on time because of the, like I said, use of internal funds for renovation and upgradation and expansion. So we are not intending in taking on any more debt, and the company will work towards bringing this 172 figure also further down, so that it frees up the company for more cash flow for more expansion.
And so on the occupancy side, I just wanted to understand that how has the occupancy been for our hotels in this quarter, in Q2?
So there has been some dents in our occupancy because of the extreme monsoon, and since we don't have any additional properties, so hence we did not have an additional growth in revenue. But even then, based on the traditional hotels which were already in the portfolio, which are aware, based on that also we have done a Y-on-Y, a 6.5-7% growth. So the occupancies were affected, especially for hotels in Manali, Shimla, and the hills it was affected. And even on certain times in Mumbai, there were certain heavy rains at that time. So there was some affecting of the markets in our main Mumbai and all also. So monsoon this year did play, while India was looking at a deficit monsoon, net to net it came to zero, which is good news for us all. So, but at the same time that came at a cost of some occupancy for us. But the long-term horizon is great for us also. That's fine.
And rates remain flat.
Rates don't remain flat. They remain the same as last year, which are excellent ARR. So there is a marginal increment, but it is not extraordinary. So you can say they are flattish. But the rates, ADRs itself still remain high compared to 19.
Going forward,
they will hold.
If demand is there, okay. The rates will
hold, if not grow. I would want it to grow, but going forward, I can definitely see it holding, because what has happened is a fundamental change. If I can give you as a hotelier and a broader perspective, the fundamental change within the industry has come from playing a insecure. The right word, but I would say that as an industry, everyone has come together saying it's okay if we do less, but we will do what we deserve, because our costs are going up. The expenses are not, in sync with what was in 2019. Electricity has gone up, labor has gone up, world uncertainties are so high. So it's okay if we have a hit on our occupancy, but we will not reduce the ARR. Then I think that is coming out equivalently in all the listed and non-listed entities whenever they speak. So this is an industry mindset which has fundamentally changed, which is very good for all of us, because there is no unnecessary competition or insecurity saying, wo kam diya, ye jada diya. So that's why the ARRs are holding. And that's why the occupancies are supporting those high ARRs, or are not high, but those holding ARRs as a whole. So next year also, the same mindset is continuing, because there is no reason for any hospitality player to now cut his sale or cut his ARR, because all of them are in financially very touchwood good positions.
And our new properties that are going to be coming up in this year, so those will also be at similar rates, or is there any difference in the ARR for those?
Within their market, they will be in the top brackets of the ARR within their own markets. It's a market-to-market thing.
Okay. No, I just wanted to understand compared to the rates that our current hotels are at.
So current hotels, ma'am, range from a Jadavgarh selling at 15 to 20,000 rupees to our Lotus Konark selling at 5,000, 6,000 rupees. So it's a very too generic a question. But what I can say is within each market, we will be in our upper bracket within our segment.
Great. All the best. Thank you.
Thank you, madam. Thank you.
Thank you very much. The next question is from the line of Pradyumna Chaudhary from JM Financial. Please go ahead, sir.
Yeah, hi. So what are our CapEx plans for the next couple of years? What I can see is our fees will be increasing by almost 50% from FY23 levels.
So the company has only upgradation where needed CapEx, which already falls within its budgets. We allot within the starting of the year, we allot budgets for upgradation and CapEx. The company does not have any major CapEx for its own existing properties in the sense. So we don't look at any, so we don't have any major spend per se. Whatever is there is within the framework of our existing budgets which we have in mind. As of now, there is no unforeseen or foreseen large CapEx which is of material nature.
So basically all these fees will be in leased properties. Is that the case?
So sir, in leased properties, the company takes properties which are on almost turnkey basis. The only thing the company needs to bring in, apart from its manpower, is maybe sometimes some additional things like software, maybe computers, and in some cases, maybe movables, disposables, which we call like linen, and maybe in some cases cutlery, crockery. So it's not to do with the furniture, fixtures, and fixed items, which are the main cost. Like air conditioning is not part of our scope. What is basically much more lighter materials, so that at the end of our lease, we can take those materials and go away. But if it's on a fixed nature, it is from the landowner itself, the hotel owner itself. So there's no major capex in that sense. Yet, every hotel, depending on its size, can have an outlay initially of ranging between 30 lakhs to 70 lakhs, depending on the number of rooms and other things. And main thing is the qualitative manpower which we hire in advance, so that we do the market mapping, so that we do various other initiatives which are there, so those all have a higher cost.
No, understood, but in terms of the keys that we are adding, most of it is happening in this way only, where we'll be leaving the property from the property owner. Is that the sense?
Yes, sir. So if I got you correctly, yes, the property owner gives it to us, and all the properties which we are doing as of now, all are on that model. If I have answered a question, I didn't get you. I thought it cracked in the middle.
Yes, understood. And second question is regarding the upcoming properties. From what I can see, a lot of these are smaller properties, let's say less than 50 keys in each of them. So, do you think we'll be, like you spoke about the Jadavpur property, where occupancies are lower because we cannot host too many functions? So, do you think that could be generally an issue in these smaller properties as well, the upcoming one?
That's a very good question. Basically, the case of Jadavgarh being little different from the other properties which we have, many of them are within the city. And their nature so Jadavgarh does not attract FIT, which we call in our parlance, of people who are, transiting, or people who are coming in for the day. People who come to a place like Jadavgarh come particularly for Jadavgarh. This is a destination end on its own, as compared to even say an Orchid Mumbai, which is 372 rooms, but caters to a wide variety of people who are doing a conference for 2 days, to people who are catching a flight come in the morning and taking an international flight out. So that kind. So the market is very diverse. So let's to give an example of Irabai Orchid Nasik, it's only 32-room hotel, but it basically caters to a lot of corporates. It caters to a lot of people who come for a one-night stay. So there, even though it's 32 rooms, it does high occupancy and it does well, or rather it was doing. Now that we renovated it, it will do even better. So there is a difference between each hotel to hotel. So in some cases, we have compromised with the inventory being small. Like in the case of Aurangabad, it's only a 33-room Irabai Orchid Hotel. But the location at which it is, we expect it to do a good ARR, and it is our entry point. Unfortunately for us, we have not been expanding till Jan this year. And now that we are getting these opportunities, it is sending the right signal to the market. And in fact, the hotel which we signed up in Chandigarh, that is a 128-room hotel. Now that would not have come if the market would not have known that Kamat are again on expansion. Oh, that's great. I want to give them my hotel. So Dehradun is a 90+ room hotel. So that maybe almost, if things go well, may almost reach 100 rooms, and it's in the prime city. So a lot of things depend on various things which the company has been doing in terms of sending the signal to the market that the company is again expanding. Then owners wake up and realize that, oh, I would like to give for Orchid, I would like to give for Ira. So that is what is happening.
Understood. Thank you.
Thank you, sir.
Thank you very much. The next question is from the line of Kinnar Mehta from Eureka Investments. Please go ahead.
Namaskaram, sir. Thank you and congratulations for a beautiful turnaround of the Kamat Group. So my first question is related to this week sale. So I see the lateral hospitality registered at the very same address. So is it the group company? Number one. Number two, sir, if I heard you correctly, it will have a 20 crores of lease payment from Kamat and it will generate 5 crores of EBITDA. So what is the rationale now to continue this arrangement? Can't we give it up? So that was the second question. I had question about interest rate, but I got it that it's 19% locked till 24. My another question is, sir, you issued shares to promoters and other shareholders at 97 rupees. But I guess still we are yet to receive some money on that. Is it received? I mean, since we have given it a reasonable discount, so whether that transaction is over or there are still few warrants which are outstanding.
Sir, I'll just take up these three questions because otherwise I'll forget. So let me just to answer you. Sir, this Lateral Hospitality is basically a gentleman from Mauritius. He is already owning multiple hotels across in London and in Mauritius, and they have other allied business, and they are wanting to grow in India. Okay, so basically we had a certain timeline, and based on that timeline, because he's a foreign national and various other aspects, we wanted to facilitate as fast as possible, so that we stand by the statements given to our lenders, So we were pressed for time. We were hoping that this transaction would be completed by August. Unfortunately, it has got delayed due to various factors, and touch wood, it has finished yesterday. So Mr. Kohli is the promoter. He has no relation whatsoever by any means. It's just that we wanted to facilitate and do fast. Now that this has happened, they will be shifting and doing as per their own thing there. So that is one. Secondly, sir, we actually had two options. One option was that we not run this hotel. Okay, we had very clearly a very nice option that we not run this hotel, and we say that bas bech diya apne ko kya karna hai. But looking at the person and looking at our vision, that today when we are looking at growing our brand Era by Orchid Hotel, and we want to take it forward, today having a flagship in Mumbai with our brand name is a big marketing and a big image plus. I mean, today bigger hotel chains than us have sacrificed much more by trying to put up a hotel in Delhi and other places. Because if you are not in a Mumbai, Delhi, sir, then you are nowhere. Today our aspiration also is that we should have a fantastic Orchid Hotel in Delhi, and we will work towards it if we get the chance and the opportunity. So in terms of taking this hotel, it was very easy for us to say, we don't want to. But when the person is good, and if I am taking today other people's hotel on lease, here is a hotel which we have only made it grow up. अभी सर जैसे महाभारत के हिसाब से अगर करना है, अपने को मालूम है कि लड़का अच्छा है, सब अच्छा है, तो इट इज आवर ड्यूटी कि हम भी उसको पुत्र मान लें और उसको आगे बढ़ा करें. एंड दैट इज, उसमें हमारा फायदा है कि वी आर गोइंग टू बेसिकली अर्न from Mr. Kohli and from Lateral Hospitality. So it is a win-win-win for us. Today it helps us that our 1600 rooms which are there, it would have dropped down to 1400, but that still remains. It helps that our turnover from 300 crore would still remain at 300 crore. It helps that our EBITDA, which was down by 20 crore, will now only be down by 10 crore. So it's a win-win-win for Kamat as a whole, otherwise we would have not done it. And we are looking at how Mr. Kohli is looking at expanding in India and building that relationship with him. We hope that he will invest elsewhere and we will be the first choice of his partnership, which is what we can see. So the time has, and there's not one Mr. Kohli, there are 2-3 other Mr. Kohlis also who have been, after we have been expanding and doing well, people have been seeing, there have been other opportunities also which have come, which are as of now not concrete. So it makes no sense for me to share any details on that. But at the appropriate time, I will be very happy, Mehta bhai, आपको वापस good news देने को, ऐसे Concall पे.
Yes, sir. So about shares,
coming to the shares, sir, these were warrants issued, and as per law, warrants के हिसाब से एक वो timeline होता है, and within that timeline, we are very sure that the promoters and the investors who have been allotted will give their balance money, because sir, it is but natural. They have invested at a value which you mentioned, and by the time it will be whatever it will be, they will still be up. So it is but natural that they will consume it because they have confidence in the promoters and the company.
Thank you. And sir, last question is about the revenue growth and EBITDA. So we are confident about that because most of now next hotels would come in Tier 2, Tier 3 cities. So we are confident about meeting our 100 crores additional revenue and EBITDA margin.
Sir, 100 crores is not EBITDA margins growth.
No, 100 crores revenue, I guess.
The growth will be of revenue of 100 crore, and the EBITDA based on what I said would be around 35% increase on the 100 crore growth in revenue. We will obviously work towards exceeding that, sir, both the top line and the bottom line, but this is our guidance.
Thank you, sir, and wish you best luck.
Thank you, sir. Thank you, sir.
Thank you very much. The next question is from the line of Hiten Boricha from Sequent Investments. Please go ahead.
Hello.
Namaskar.
Hello. Yeah, good afternoon, sir. Namaskar. Sir, I have one question which is related to margin. You mentioned our margins are impacted largely because of one-time expenses of stamp duties and other related properties. So can you quantify the same? What is the one-time expenses this quarter?
I just asked Gita ji to share with you this details.
Sir, we will get back to you on the things by detailed note on the same.
Okay, okay. And one more question to you, ma'am. You mentioned current interest cost is around 20%, which is going to reduce around 15 to 16%. Is my understanding correct? Or is it...
So let me correct you over here. My interest cost would remain 20%, but my principal amount will go down by 150%. Okay. Because of that, my interest amount will go down.
Understood, ma'am. Yeah. Thank you. I'll get the numbers offline, ma'am. Thank you.
Because we don't have it on hand and there are many more questions actually. So we will definitely the thing is, sir. Thank you.
Sure, sir. Thank you.
Thank you very much. The next question is from the line of Asha Patel from Molecule Ventures PMS. Please go ahead.
Very good afternoon. Thank you for the opportunity. Namaste, Vishalji. First of all, I would like to congratulate you and the entire team for absolutely turning around the balance sheet. And now we are standing with a very robust balance sheet. Our net levels are only around 170 crores, which is equal to our 2 years of EBITDA and cash flow. And our upcoming properties are all under the lease model, which doesn't require any upfront capex as explained in detail by you. So how do you plan to use around 90 crores of annual EBITDA, which we are already generating from the existing properties?
Sir, thank you, Ashokji. Basically, sir, the 90 crore, out of that, many of the expenses which are of the past, that also has been one of the reasons why you see that the overall PAT is down, because there have been various fees. This 1 year is a very important year for us to clean up our balance sheet and to remove many things. So there have been many extraordinary fees which normally are not there, which are one time, that have been paid. Then there are certain other expenses which have come one time. Then as part of expansion also, whatever expenses have been there, those one time. So in this 90, it is not 90 that as a whole will remain with us as a surplus. It would be lesser. The exact quantifiable number I am not having, but I would say that whatever would be, we will utilize that in the month of, probably in the month of June, July, when our refinance comes for 175. At that time, we will see how much the company should keep cash in hand and how much the company will use to bring down 172 and then refi the balance. So like hypothetically, if the company has say 40 crore in hand, the company may decide, let us keep 10 crore in hand for expansion and for any surprise, and 30 will be probably given, and then that 140, 130, 150, whatever. Again, like I said, it's all hypothetical. So that's why that final figure we will know more in June. But obviously the company will look at trying to bring this 172.5 figure further down, because there is no need for the company to continue the high interest loan.
Sure, got it. And sir, from having almost no upcoming hotels in the pipeline to having 8 hotels in the pipeline at the same time, we have started out an excellent growth path for our company under the leasehold model. So, in fact, 3 properties were announced this quarter itself, which is Noida, Toyam and Ayodhya. So what gives you the confidence that you will be able to scale up? And what are your future aspirations and vision in terms of growth coming from?
That's a very good question, sir. So scaling for Kamat has not been an issue ever. In fact, being patient and waiting the storm out was the real skill, because we are always known for our expansion. Kamats have, as a family, we are known for growing. It is in fact been against our nature to be patient, make sure that the things are done diligently, cleaned up, and weathered that storm, which we basically have concluded in January 2023. So that was actually not our nature. So now growing with the learnings of the past, that is basically what we are banking on. So expansion per se is not an issue. What is basically, you asked about the second part, which is what is our vision forward. There is a reason that we are looking at leasing or ownership. Ownership, I just mean that we have ownership hotels, but these models, why they are more interesting to us is because in management, unfortunately, even now there are a lot of challenges where many a times the owner is not qualitatively involved in your brand the way you are in it. And they would want to take shortcuts, they would want to do certain things because their whole agenda is something else, as compared to it's not necessarily aligned with the operator. Now, yes, out of 10, I may get 5 very good owners, but 5 are very difficult owners. So if I have confidence that no, this property will do well, and I am willing to put my money where my mouth is, then I will be able to take that full benefit and that full value. It doesn't mean that we are not open to management. Like in Lonavala, we have good owners and we have done a management with them, and that is doing exceedingly well. There have been some other opportunities also which we took on management, which have been converted, which we are looking at again further also. So management is our more pick and choose based on seeing the person, seeing his family, and seeing their core business. If their core business is hospitality, we may not be interested in taking their property on management, because then they know more than us, but yet they have come to us for management. But if their business is something else, and they have done this out of diversification or some other interest factor, then they are more open-minded, and they will listen to us as the operator, because then they recognize that we know more than them, and they are wanting a result. And when we give them that result, they don't interfere. So that's the kind of management which we will look at, and we are looking at. But like I said, it's a pick and choose more, like the Orchid Toyam. The Orchid Toyam is a management property. Though it's a very upscale property and we intend to sell it at a very high ADR of anywhere between 15 to 25,000. The idea behind taking it on management was that the owners are good, okay, and we thought why not do it. So this is more important. So it's not that we are not taking on management. We are very choosy on management, and if we have confidence in a product, we are willing to take the bet on it. So that's the thing.
Sure. Thank you for the detailed explanation. I got it.
Thank you.
And sir, next question is that subsidiary contribution has meaningfully increased compared to FY20. Our sales from subsidiary are up 70%, and the subsidiary contribution to the EBITDA is up threefold, almost from 6% contribution to 18% contribution in the consolidated EBITDA. So which key properties under our subsidiaries are driving this growth, and what is your future guidance for the same?
So sir, basically what has happened is post-COVID, the scenario changing drastically. Our 100% subsidiary of Kamat Hotel India Limited, Orchid Hotels Pune Private Limited, has been doing exceedingly well. That property particularly is the main cause for the increase in the overall EBITDA growth which you have shown. That was also one of the problems, the properties which we had initially had an issue on, based on which the entire turnaround has happened. And consolidated wise, all the properties are doing exceedingly well. We also have Bhubaneswar also, we also have this Pune also, and going forward, we see the market stabilizing and Pune Orchid continuing to do what it is doing right now.
Okay, got it. Super. And sir, just to summarize what you have earlier mentioned, that our existing run rate of, including that IRA Mumbai lease property coming 10 crores from there and 90 crores from the existing city, we are looking forward for around 100 crores of top line. On top of it, from the 8 properties, is it correct to summarize we can get close to 30 crores EBITDA incremental? And so next year, FY25, we could be looking at around 130 crores EBITDA?
It would be fair to assume that we will achieve a 130 crore EBITDA based on what guidance we have given. And that is our conservative estimate which we are given based on this thing. Yes.
And sir, what would be the total annual lease amount cumulative? I understand case-by-case, property-wise, property leases would be too complex, but what would be a cumulative annual lease amount for the upcoming 8 properties?
Actually, this was a question already asked by Mr. Mehta, and we weren't prepared for it. So we will definitely get this detail and share it with this thing, because since it is all different properties with different things, we'll work out that chart and we will share the details with you.
Sure, sir. I also request you to mention the detail of cumulative expense happening on account of renovation, because as far as I understand, over last 2 quarters, there has been renovation done at our Orchid Mumbai, IRA Mumbai, Nashik, Orchid Pune as well. So we have it along with that, even the lease which we have signed for the new
properties and all the legal expenses associated with that. I think that is what is causing pressure to the margins, as margins are down from sequentially from 40% to 30%. So if you could state out that in future, that will be very helpful.
We'll definitely do the needful as suggested by you. It's a very good suggestion. We have not done major capex, but there have been certain minor upgradations which are required to remain competitive. Unfortunately and fortunately, the occupancy being so high, the wear and tear is more. So because of that, we need to constantly do upgradation within our running environment. So while it is not a massive renovation, it is definitely there. So yes, we will take note of that. Please take note of that, and accordingly we will add it in our presentation also next time.
Sure, sir. Last question from my side, sir. So we recently announced the acquisition of Envotel Hotels Himachal Private Limited. So can you please give more details on that acquisition and how would it be more beneficial to us?
So, hello?
Yes, sir.
So basically what has happened is that it was doing very well. Unfortunately in July, there were certain challenges which came in the entire Himachal, which is well covered by everybody in media. But Himachal as a whole still has great hope and great scope. And we are seeing that kind of recovery in the coming season. So this was an opportunity for us where we were able to take it over. Because unfortunately, many people do things out of interest, but then may not sustain. So we had this opportunity where we have the holding power and we have the growth vision also. So we decided to take this opportunity up and we made it into our own subsidiary. So that's basically now Orchid Shimla and Orchid Manali are our subsidiary leased property. So the turnover of that will add entirely to the company or as a Concall. And what we have as a company thought is that there are a few other opportunities which have come in Kasauli and in Dalhousie, and we will be taking more of the Himachal properties within that entity. So that entity itself will have a focus of Himachal and will grow further in that. So it's a good opportunity for us. And looking at how the books are in November and December, I think that it's a really good timing that we have done.
Okay, sir. And earlier we were going to spend around 50 lakh to acquire that company. But recently there was an announcement that there would be revised cost and now the acquisition would be at face value. So can you please repeat it? What would be the cost?
So the cost is at face value, which is approximately 1 lakh. We are basically as part of our negotiations and as part of certain other things also, we were able to create that value for our shareholders by bringing it further down, and we have taken it over on that front. So that will come to around 1 lakh. We have taken it at face value, and we have saved and not spent that kind of thing because we ultimately would do whatever is best for our overall. So we did that. So we were able to bring that down.
And the new upcoming property, Lemon Tree Hotel, which is upcoming near our Orchid Villeparle, as far as I understand, that is at very different price point of around 20 to 25,000 ARR. So that won't be we won't be competing with them. Is that correct understanding?
No, it's not like that. See, whatever ARR they are projecting at, that will be a marketing strategy for them. I am nobody to comment on their marketing and their thoughts. I do not know, I do know, but it is all hearsay in terms of what is their ARR and occupancy. So I would not like to comment on them. What I can say is that Mumbai is a evergreen market where more people, as they are coming on board, you don't find a major impact. Lemon Tree as a hotel came before also next to ERA, and still the occupancies and the ARRs are what they are for the city. So a new entrant coming in, Mumbai has the ability to absorb and expand on that. So it's welcome. Then they are good people, they are good chain, they are our friends also. So there is no issue if more and more people come.
Okay, sir. All the very.
Hello. Next one. Hello.
We move to the next question. Due to time constraint, we will take Harshit from the line of Harshit from Robo Capital. Please go ahead.
Hello.
Hello, namaskar.
Yeah, sir. I just wanted to confirm that the debt is reduced to 172 crore and the yearly payment will be around 34 crore. Am I right?
Yes, sir. You are correct, sir.
Okay. And the interest rate is around 20%, current interest rate.
Correct, sir.
Okay. Yeah, yes, I want to confirm. Okay.
So with that, we would be happy if anyone has any other questions, then they can send it to us and we will get back to them. I apologize due to the constraint of time, and everybody has taken their time out and heard us patiently. I hope that we have been able to satisfy the queries of even the other listeners who may have had the doubts in their mind. We are committed to staying on path in terms of what we have shown, and we will be very happy that if there are additional anything news to share, then we will do the needful through our team at EY and also the company directly. So thank you everyone. Thanks a lot, and I appreciate everybody taking the time out today. Thank you all. Welcome. Welcome.
As there are no further questions, I would now like to hand over the conference to Mr. Vishal Vittal Kamat for the closing comments.
Thank you, Malcolm. I have given my closing comment, and I've mentioned that already.
Okay. So on behalf of Kamat Hotels India Limited, that concludes this conference. Thank you for joining us, and now you may disconnect your lines.
Thank you.
Thank you.